The time has come. That is the resounding words of Jerome Powell, the Federal Reserve Chair, which means lower interest rates are going to be on the horizon. As soon as September, we could see a 0.25%, if not a 0.5% reduction in rate, which means how is this going to affect the AI sector? And what is it going to look like for the three biggest companies that we're going to be focusing on today? Now, if we look back at 2022, it was really the fastest increase we've ever seen. Of course, making things a lot more expensive, not only more expensive in the perspective of buying new things, but also looking at larger businesses and investment, their structure, the cost of goods themselves have went up dramatically, which of course does affect the AI sector, and making things more affordable by lowering those interest rates are going to make a big difference. So looking at some of these large players like NVIDIA has been the flag bearer and really the flagship when it comes to generative AI, artificial intelligence. When it moves, the rest of it follows. Now we know NVIDIA is going to be reporting their earnings pretty soon, which means, and people are saying it's going to be a 10 to 12% beat over the earnings that they have. Now, of course, when you think of NVIDIA in the macro development, the Fed announcement, just a big change. So when you think of NVIDIA and the price jumped on August 23rd, when they had the speech, when it came out saying the time has come, because we know exactly what this means, but NVIDIA gained 4.6% just based on what the Federal Reserve said. Now, of course, the direct impact lowers NVIDIA's business and is likely to negligible as the company is very, very high profitability, but overall they are carrying $8.5 billion in debt. When you start looking at debt of that magnitude, if you can lower the amount you're paying on the debt, it can make a huge impact to the bottom line of these companies when you think of billions of dollars of debt. Which again, looking at NVIDIA, it is a company that of course would benefit from the lower interest rates. It would encourage other companies, more spending, more investing, more AI, favorable really for the chip leader. Billions of dollars are already flowing into the new technology, and they're expecting this company to be number one, $3 to $5 trillion within the next 4 to 5 years, which is kind of crazy to think that a company is going to be that much. Now, of course, this makes it generative AI expensive, but of course, startups can borrow more money. Startups can do it at a much lower rate. So lowering these rates are going to make a big difference when you're looking at some of the venture capitalists and people looking to invest in a generative AI. NVIDIA is definitely one that is going to support and has been the backbone. Second one we look at is the advanced Microsoft devices or micro devices, which of course is AMD. Very similar to NVIDIA, they are the chip producer. They are one that is in the generative AI race, recently launching the MI300 data center GPU, and their revenue is up more than 100% in the second quarter. That's huge. Because when you think of the return, it's kind of crazy to think revenue up more than 100% in the second quarter. Now, of course, as a chip stock, and this is where the companies really do kind of run that common thread. When you look at the chip stock and when you think of what they're doing right now, AMD is a big performer when it comes to the chip maker, when it comes to the GPUs, or excuse me, the CPUs for this company. It just made $4.9 billion cash and stock acquisition of ZT Systems, a provider of AI infrastructure. They are doing their best to keep up with NVIDIA. And of course, on top of this, they are the processing data centers as well, using all of the cash to purchase a huge Silo AI, which of course is a massive investment. Falling interest rates will make everything easier and cheaper for AMD to borrow, make more acquisitions, buying out some of these companies, and of course to compete with NVIDIA itself is going to be a big player. Another one huge in the AI space, which is the opposite of what we see with AMD and NVIDIA, which are the chip makers, is Microsoft. Microsoft is another one that will benefit from lower interest rates, cheaper borrowing costs, looser monetary policy, encourages more spending from consumers and of course from customers, meaning that they are going to use more products and services when it comes at a cheaper price. Now, when we look at the peers and when we look at the evaluation of Microsoft in comparison to the other ones, lower interest rates will of course make the bonds not as worthy. It makes the stocks go up a little bit, and investing in blue chips, this is where the money is going to go. And for a lot of people that are kind of on board or a little bit behind, you have to think about this big picture. You have to think about the economy in its entirety. Right now, a lot of individuals have money into bonds. A lot of money went into T-bills. these high yield savings accounts. We've seen it with a lot of CD rates. As the Federal Reserve continues to lower rates and as they continue to kind of move that bar down, all of the CD rates, the high yield savings, the bond rates, everything is going to slowly dissipate over the next probably 6 to 12 months. Could even look at 18 months. A lot of this is going to dissipate, meaning all of the funds that were put into these CDs, these high yield savings accounts, everything else is going to have a place to move. That is the money that is going to be moving back into the stock market, going to be moving back into the crypto market. There is going to be a massive outflux within, again, the next 6 to 12 months when it comes to all of this money in financial institutions, because of course, financial institutions will no longer need the money that they generated and that they really have, or really paying for this money on the CD front, because rates will be lower to borrow money themselves, making it a lot easier. And this will actually speed up the economy. Now, the fear within here is, what if the economy really starts booming again, and we start seeing, the borrowing start coming down, people start buying a lot more, because this is kind of by design. They're going to have to really take this with kid gloves, do it really at a slow pace. And that is why the reason I feel the rest of the year we might see a 0.25%, which of course might come in September. And that might be the only adjustment we see in the year. Now, also remember and keep in note that it is an election year. So that is a big player when it comes to the stock market. Both the Republicans and the Democrats makes a difference. And honestly, big picture doesn't make a big difference when it comes to the policies, but that is where we could see exactly what's going to come out with the policies, who's going to win, and what's going to happen with that. Now, when we start again looking at Microsoft, they are partnered with OpenAI. Now, if you're unfamiliar with OpenAI, it is a private company, which of course lower interest rates mean they can borrow more money as Microsoft. Microsoft can pump more money into OpenAI and the development of technology, making sure that they are really having the cash flow and freeing up some of the cash flow and some of the money that they've borrowed to develop the artificial intelligence, which of course in turns runs on the chipsets from AMD and also the chipsets from NVIDIA. So we know it's going to be huge. So a lot of people are saying, is NVIDIA worth investing into? My thoughts right now, the answer is yes. Looking big picture, what artificial intelligence is doing, even looking at, schools, public schools where my kids go, they're incorporating artificial intelligence even on a very educational level, that they have the ability to use artificial intelligence to educate a younger generation, which again is kind of crazy to think that there is going to be that much of a difference with artificial intelligence. But if you're anything like me, being in the YouTube space, artificial intelligence is here. If you look at, utilizing vidIQ, using Canva, using anything even in content creating, anything in writing, artificial intelligence is here. It is incorporated into everything that we do on a daily basis. When you start looking at Copilot, when you look at OpenAI, ChatGPT, most people are using artificial intelligence in some way, and they've incorporated it into a ton of other ways. And a lot of people, again, kind of thinking big picture, is artificial intelligence going to slow down? Are we going to see people start pulling it out of places? Are we going to see places where it is no longer utilized? Not at all. They have an NVIDIA target right now. I know the current price is around $128, but they're looking at a target price of probably $160 to $180, which means that NVIDIA has a lot of runway to grow. And especially if they come out and their earnings beat on that 10, 12, 14%, which is kind of anticipated, it's going to set the tone for the entire market. And you could see it blow up much higher, much faster than we've seen in the past as artificial intelligence continues to grow. All right, guys, so that is going to do it for today's video. Let me know in the comments what you guys think. And as always, thank you guys for watching.